All right, so it's 6 or 7:05 Eastern time. Do you guys want to give people a little more time to join, or are you guys ready to start?
It is recorded to Saturday night. I don't want to keep the cousins who are on time here too late, so I vote to go ahead and start.
All right. Get it then. We can go ahead and start. Oh, Andrew, you have a commercial to show? Okay, I'm with it. We could do that. Let me unmute Andrea real quick and see what this commercial is about. Andrea, you've been unmuted. Go ahead and unmute yourself and tell us about this commercial.
Can you hear me?
Yep.
Okay. I had posted in the Facebook group the Bloomberg Summit that it was held in February, and I just put some timestamps on that video from YouTube, but it had someone said to just speak on it. And so I just put something together, and part of it had a little commercial in it that I thought was really cute.
Okay. So I mean, I don't know about anybody else, but I'm okay if we want to go ahead and give Andrea permission to share her screen and show the commercial real quick.
Is that okay with everyone?
Yes, cuz I'll go for it.
Okay.
I haven't been on Facebook recently, so I love to see it.
Yeah, I didn't see that either, so I'm excited to take a look also. So, did you already give her permission to share, AJ?
Oh no, sweetie, I'm sorry. Hold on, let me give you permission. Y'all, I am chilling on a Saturday. I'm forgetting about all my little host abilities.
It's all right.
Okay, she should be good to go.
Oh, 1 second.
Okay.
Oh. Thank you, Renz.
Where's the share? I'm not seeing share screen. Oh,
At
I
the
see.
bottom.
Oof, what's not going on? Can you see?
I can see
Yes.
that you're trying to share. Okay, yeah, now I can see it.
Yeah.
1 second. So it was the Bloomberg Crypto Summit. It's 3 hours long. So what I did was I just put timestamps on the various segments. And afterwards, I was noting that you guys' themes kind of match what they were talking about. Kathy Wood was in it, and a lot of other players were in this. Let me get to the commercial. Let's see here. So this is what I did. The timestamps had, the first part was like a crypto forecast. This is where Kathy Wood was in there. The second part talks about central banking. The third part is regulatory outlook for Bitcoin in the United States. And then the final part was how to value digital assets. And if you want to go back and look at the actual video, but I'm going to go through. This guy's name is Mike McClone, and he pretty much narrated the first part. He just showed this particular screen where it had Bitcoin and Tesla, how the market was volatile and how they ran together. He had another screen that talked about how Bitcoin started, way back when no one was really interested in it, but it has grown in adoption. So I think they're saying that this is the first of its kind dominant global network. And so my key points that came from the summit was the world has never transacted like this. Keywords were prudent accumulation. This is where it's time for people to invest in crypto. It would be prudent to do that. He also said, this is a long video, so this came throughout, but digital dollar dominance is the keyword for this era. Kathy Wood was saying in the early days, the SEC was like, well, what is this Bitcoin animal? They didn't really understand it. Now she's saying that the SEC director now reports to the chairman. What's good about that is that the director has a background in tech, plus the SEC chairman is very familiar with Bitcoin. So it's almost like a new era. And now she's saying too that the New York Attorney General is saying that the volume and the market cap have increased dramatically, where now we have their attention. She's looking to see that there'll be an approval of the digital product. And the risk before was that the government, they were saying the government's going to shut you down, but she's showing how that's not going to happen. And she was surprised by the fact that how institutions are now using their cash. They're actually diversifying into Bitcoin. And so she's saying that there's a new asset class that's coming, and it's going to be in Bitcoin. So here's the little commercial that I thought was funny. It was titled, Why did you invest in gold? Can you still see? Can you guys still see?
I can still see.
I think it's trying to, yeah, I think it's trying to come up on my end. I don't see the video yet though.
Yeah, I don't see the video, I just see your screen.
Are you able to see the video?
I hear it.
Yeah, I hear it, but I don't see a video as of yet.
Hold on. One second. One second. I need to reshare. Okay, I don't want to take up too much time. It didn't. I need to go out and come back in to reshare it. It looks like I'm clicking on meeting controls, but I don't see my Zoom screen. Let's see.
But you also did say, because it was posted on you posted the commercial on the Facebook for us to also look at there as well, right?
Yeah, I need to reshare the screen so that it goes right there.
Okay.
Someone saying, "Oh, that summer it was so long," and I was saying that's why I had put up the timestamps. Where'd it go? We can move on, and I can show it at the end.
Okay, we could do that. So just try to keep working to try to get it up, and then at the end we'll circle back.
Okay, thank you.
Sound good?
That's
no
good.
problem. Thank you, guys. We appreciate that.
No problem.
Definitely appreciate that.
Like you said, it definitely segues into Vanessa's argument. So
yeah, so what we can do is we can go ahead and start the conversation just on the overall adoption of cryptocurrency and how it's becoming more popular. And then at the end of the discussion, we can circle back to Andrea and see if we can watch the commercial before we move to the next topic. All right, so welcome you guys to another installment of Sentiment Saturday. Again, these are the topics we'll be talking about this evening. So we're going to talk about big banks and how they are adopting cryptocurrency. We're going to talk about central bank plans of leaving the short-term rates near zero to keep up with economic health. We'll talk about the importance of the 10-year Treasury yield. And then last but not least, we're going to talk about Goldman Sachs and their revision for its GDP growth predictions. Again, if you guys weren't here last week, or if you haven't seen the updates to the format of how we are doing Sentiment Saturday from now on, it's not going to be a presentation where we sit up here and go through slides and talk to you guys about this. It is going to be more of an open forum discussion. So we'll kick off the conversation and give a couple of thoughts and comments, and then we will open the floor for the cousins to share with us as well. So we just ask that you guys raise your hands and we'll unmute you so that you can share in on the conversation. And with that, we'll go ahead and get started. So everyone has seen the rise in the popularity of Bitcoin and other cryptocurrencies. You've seen that Bitcoin has risen to, I think, as high as, what was it, 58,000, 52,000? Yeah, 52,000. They went just above that. So we've seen how high that stock has gone for Bitcoin. We've also seen Ethereum and Dogecoin have been going up as well. And so falling in line with that, we're starting to see big banks that are actually moving towards embracing Bitcoin and cryptocurrency. So this is a sign that the world is moving towards an adoption of a digital currency. And we want to talk about what that maybe means for us. So some of the banks that are actually adopting cryptocurrency are Bank of New York Mellon. They've actually come out and they've said that they are going to be making leaps into the market of Bitcoin. They are going to be making ways for their asset management clients to actually issue and transfer cryptocurrency. They're going to be using some of the same platforms that they have in place for their traditional holdings to now start to transfer Bitcoin and other digital forms of currency. Goldman Sachs also restarted their cryptocurrency desk so that they can start trading cryptocurrency. And they're going to be dealing Bitcoin futures and non-deliverable forwards for clients next week. So as early as next week, you'll be able to do that through Goldman Sachs. And they're also exploring the potential for a Bitcoin exchange traded fund, or ETF. We do already have some Bitcoin ETFs. They're very new. So there is the Purpose Bitcoin ETF, and there's also, and that one is out of Canada. And there's also another Bitcoin ETF called the Evolve Fund Group Bitcoin ETF. And that actually launched just a day after the Purpose Bitcoin ETF launched. So when the Purpose Bitcoin ETF launched, it launched with a big boom. There was over 400 million shares that changed hands during the first 2 days, but then it dropped off to about 17 million. So that kind of shows signs that maybe investors are a little bit fickle about investing in Bitcoin, but even still, just the large numbers themselves and the volume itself just show that the world is getting ready for Bitcoin. The only thing that maybe gives me pause about where we're going with Bitcoin is that there's still a lot of investors who don't really understand it or trust it. So when they surveyed American adults to ask them if they had ever heard about cryptocurrency and different forms of cryptocurrency, and a large percentage of them had never even heard of it. And then what's even more alarming is the people that did hear of it didn't understand it. And those that understood, there were 43% that said that they don't necessarily trust it, and they have doubts about whether or not it's going to be a legitimate form of payment. So I want to go ahead and open up the floor now and get some of you guys' thoughts about Bitcoin being available in banks, or being able to be used as a digital store of, a digital store of currency. And whether you guys have an understanding of it, if you have a trusting of it, if you think it's something that's just a fad that's going to go away. I know we talked about this a little bit last week, but I'd love to continue the conversation with some of this new information. So we got some hands raised here. I didn't really see whose hand went up first, so I'm just going to go with the order that you guys are listed here in the participant list. So Mansa, you have been unmuted. Go ahead and unmute yourself. At least there you go.
Okay, yeah. First of all, how's everybody doing? I'm pretty new to the group, but to the cousins and investing in the broad market in general. But I have invested in cryptocurrency since 2017. Some things starting out with cryptocurrency, I think it might be my perspective might be a little bit different in that I'm comparing the general market to my experience coming in from cryptocurrency. And with cryptocurrency, the things that jump out at me is that the cryptocurrency blockchain market is much more speculative. When you are looking at fundamentals, the fundamentals really aren't there to the same degree as if you're looking at companies. Another thing with that, with it being speculative, it is manipulated a lot more. For example, Jamie Dimon just a few years ago said he had a lot of negative things to say about Bitcoin and the crypto market in general. And then next thing you know, they're investing. I do think that with cryptocurrency, there's opportunities to make a lot of money in the short term. For me personally, it's definitely the most lucrative investment that I've made. But I'm not optimistic in the long term because the fundamentals aren't there. Some examples are for Bitcoin. There's a lot of as far as a currency, there's a lot of coins that are better than Bitcoin in certain aspects. For instance, Bitcoin is very expensive to transfer. The transfer fees are expensive. Even though it is decentralized, a few people have a whole lot of Bitcoin. It's manipulated a lot more, the prices. And as far as blockchain, is consistently evolving. There's better coins coming out right now. The NFT space is really based on basically Ethereum, but Ethereum is very expensive as far as transactions. There's other coins coming out, Neo, and some other ones. I don't want to just rattle them off, but that have lower transaction fees, much faster, and the space is just evolving. And it seems really hard to it seems the best word I could say is guess what's going to happen in the long term, but in the short term, especially with seasonality, it's kind of easy to predict some things, but for the long term, I feel like it's very unpredictable. That's all I have to say at this moment.
Okay, thank you, man. So that's I appreciate you sharing your experience with Bitcoin. It sounds like, as you said, that you have a bit of experience with it. One of the things that I wanted to ask about, and either you can answer or someone else that maybe knows. You said that other coins are coming, and in my research, I did see where like JP Morgan had their own coin. So is it just that anybody can just say, hey, I have a Bitcoin or I have cryptocurrency now, and this is the value of it? How does that necessarily work? And again, that question is open to anyone that has the answer. Or I can't, okay, so I'm like, I can't tell who has the answer. Man, so I re-unmuted you. If you,
Well, I could give a anecdotal experience. When I started investing in cryptocurrency, I started out with it's been one of the top three. It was called XR. It's called XRP to a company called Ripple, and that really got me into it because it just made sense. I kind of found out on a fluke about it. That's which one I started out in 2017. Basically, the premise is that banks, when they, so like say if you input money into Wells Fargo and you're going to send it to someone that banks with Bank of America, your money isn't actually going there. It's called a nostro account, to where it is a agreement between banks to where they're lending the money between each other when you're transferring the money. And a lot of small banks go out of business because they default on these nostro accounts. And with cryptocurrency, with this XRP, it was just you'll rapidly be able to send the amount of money in this coin. Now, I got out of XRP because I went to Wells Fargo one day and they had Zelle, which is their own basically blockchain to exchange funds. And so I was like, okay, so why would a bank have a publicly traded currency that can fluctuate in value if they could just make their own, which Zelle did? Um, so that's my take on it. As far as Bitcoin, there's been numerous kind of alternative Bitcoins that have come out. There's Bitcoin, I can't think of the name, but it starts out with Bitcoin something, is by the Winklevoss twins. Someone can Google it. But they came out with their own Bitcoin. There was also a Litecoin that guy by the name of Charlie Lee came out with, where he created it. It was much faster than Bitcoin. What Bitcoin Cash? That's it. That's the one. I just saw that in the chat. That's it. And there was a Bitcoin Dark that came out, and some of these was exchanging for some good money. That's what I mean. With it, it's kind of like with the blockchain cryptocurrency space. It's kind of like honestly, quick licks is much different than my experience with the long-term investing and the research and the fundamentals, when it's changing so fast that something new is always coming out. For instance, right now in the space, the big things is the DeFi space. But anyway, I'm getting away from it. To answer your question, Zelle's an example. Bitcoin Cash is an example. They had a Bitcoin Dark, Litecoin. These are examples of other coins that have come out as far as cryptocurrency. And in some ways, they're better than Bitcoin in that they're much faster and the transaction fees are lower.
gotcha. All right, thank you, Mance. I appreciate that. We are gonna go to Barbie next. I believe you were next in line. You've been unmuted. Go ahead and unmute yourself. Barbie, did you still want to share?
Hello, can you hear me?
Yeah, we can hear you now.
Okay, sorry. Hey guys, so my question is about the process of investing in Bitcoin from like start to being able to secure it, because I know that, so I haven't invested in Bitcoin myself. I know plenty of people that have. Since I'm still working on being able to scale my account to be able to do such a speculative move like that, just because I'm not sure, especially with Bill Gates' statement about him not being confident in Bitcoin because it uses so much energy and everything like that. Like, I'm still not comfortable with it. But like from start to finish with Bitcoin, from the moment that you purchase it, like on an app, right? So I think it's Cash App and a different app, and then securing it. I'm just going through the process. Like, from what I know, you buy the Bitcoin, you secure it somewhere. That's where I'm not sure of. And then where you're able to have ownership, that it doesn't get stuck into an account. And then also, is it needed that you buy a token in order to have it? Because I did hear that you need to have a token where the Bitcoin sits on. I'm trying to understand how to invest in Bitcoin to where it is secure and you have full ownership of it. Am I making sense?
Yeah, no, that makes sense. Let me see. I feel like Lori, you're being asked to answer this question. Lori, do you want to unmute yourself and share some information?
Hi, everybody. How are you?
Hey, Lori.
How are you doing? In terms of I got started in Bitcoin and the crypto space in 2009. The pretty much if you're like in like Binance or any of the exchanges that are not US based, their exchanges are a lot more complex than the US versions. And the United States doesn't really have, very complicated exchanges. If you're through Cash App pretty much where you're transferring money from your bank, and then they have like a very elemental level for you to purchase Bitcoin. It's the money stays in Cash App, within Cash App. And then as Bitcoin goes up, you can resell it and then collect your profits and then transfer it back to your bank account. If it's Coinbase, Coinbase has a crypto wallet which sits right inside of the platform. It's not the same as a token because tokens are different from the actual coins. Some of the exchanges, they have tokens, plus they also have coins. But then like if you really wanted to own one of the cryptos, you would purchase a VPN or a wallet, a crypto wallet, which is like a hard drive that you would store like a digital key on the hard drive. And then whenever you wanted to like sell your Bitcoins, you'd have to connect it back to your computer and then upload it in the exchange, and then pay like a transaction fee in order to transfer it to whoever you're going to transfer it to. But that was the way that it was done back then. Now they're trying to simplify the process to make it faster for certain coins, where I know Binance has Binance US, but they don't have all the coins that are available on the international exchanges. If you go on the Binance for the Chinese side, their exchange is worse than Thinkorswim. If you're confused with Thinkorswim, you're going to be confused with Binance on the Chinese side because it's just so complex. And I agree with the previous speaker who spoke about a lot of it is speculative. It is speculative, and then there's a lot of coins that are in there which are pump and dumps. But I think once they start to regulate it and the banks start to get involved, they're going to put some regulation on it to allow for it to become more stable. But a lot of people right now, they put money in Bitcoin because they're comparing it to gold. And, they say it has a store of value, but it's a little bit still unstable because today it could be 50,000 and tomorrow it could be 30,000. So we'll wait and see what's going to happen.
Yeah, I appreciate that. Also, Barbie, if you need to get some more information, Griff put up a link in the chat there that has more resources. So if anybody's looking to get a little bit more information as to how to operate, how to maneuver within the Bitcoin world or the crypto space, be sure to look up that link. That'll give you some more information about the resources. Darius, we're gonna come to you. All right. Go ahead and unmute yourself, brother. We don't hear you, brother.
Yeah, he's unmuted, but for some reason I can't hear him. It's weird.
Can you guys hear me now?
There we go. Yeah,
Okay.
we can hear you now.
Okay. All right. Yeah, the thing with Bitcoin and it being adopted by like big banks and things like that, I think it's going to happen. Just because like it is a store of value, and the way the technology basically works is like the blockchain is transparent. From what I know, I could be wrong. Like I said, this is just based on my research, but the blockchain is like transparent and it's secure enough to where if a transaction occurs on it, everyone can kind of see what happened and how the how the process went from you buying it or whatever until it gets transferred to the other person. So that's a plus with the security and the level of encryption that Bitcoin offers. And then the whole decentralization aspect of it, that's another big positive thing that I think would allow banks to adapt to it easier, even if they have to fight regulation on the way, because the fact that it is decentralized, like the other guy was saying regarding Ripple and XRP, is that you can basically transact large amounts of money in a very quick time frame across borders, without having to go through like the SWIFT system, which is something that current banks use now, where when you send a wire from the United States to Japan, it might take you a couple hours or a couple business days, and it'll cost you thousands or tens of thousands of dollars in transaction fees. And then something also to consider with Bitcoins is that there are only really like about 21 million Bitcoins in existence, and about 10% of those Bitcoins are lost or held by the owner. So that really leaves about like 19 million Bitcoin in existence for people and institutions to accumulate. And then you got to think about it like this as well. In the United States, there are, I don't know, like off the top of my head, but the last time I checked, there's about like 15 to 20 million millionaires. So therefore, if even every millionaire in the United States bought a Bitcoin, and this is outside of institutions, that would dry up all the supply, and therefore that would force Bitcoin to go up to the point where it becomes a real store of value versus something that's like speculative and doesn't have any fundamental basis. Like I said, I think we're in the very early stages of cryptocurrency infancy, and a lot of these institutions are kind of light-handed with adopting it because of the fact that they've been dealing in fiat money for the past hundreds of years. And I've read several books where basically no form of fiat currency has ever survived. None. If you look up the history of fiat currency, none have ever survived. I think the American dollar is like the longest one that we have that has survived. And even then, that currency has lost about 99% of its value because it's not backed by gold, it's not backed by anything. And governments can print, they can print this money on demand. So it's baseless, it's valueless. So that's I think a big advantage of Bitcoin is the fact that it's a finite supply, and therefore only so many can be in existence. And you can't make any more, so that'll intrinsically drive its value up. And then my last point I'm going to make is in regards to the fiat argument, is that a lot of these countries, especially the third world countries or countries with unstable economic, they're unstable economically, like Greece or a lot of the countries in Africa, they could benefit by putting their sovereign wealth funds into crypto or something of that nature, because their currency is basically worthless, and even when they tie their currency against the dollar, it's worthless. So that's all I really have to say regarding that. And then if anyone wants to interject, you'll feel free. I'm pretty sure I got something wrong because, like I said, I'm still learning this space myself, but I think it's going to be the standard. It's going to be the standard, and the governments are just trying to find a way to regulate something that was built on the emphasis of not being regulated. So
Make sure you catch your breath, brother, because it felt like you were doing like certain bars. So that was Man, fire. You obviously been doing your research. To your point, yes, I do believe that currencies have a lifespan of about 200 years, and U.S. dollar is creeping up on that pretty close. Um, Kind of concerning. It's actually been something that I've been tracking. But yeah, I think if we can find a way to separate politics and currency. Cryptocurrency could be that way, but still in infancy, and you know, uh, let's see where it goes. A lot of good points there, Aisha. We're gonna go to Alistair.
So Mike, we're gonna let this be our last Bitcoin comment because we still have 3 other topics to get through, and it's already almost 7:45. So we don't want to keep the good people too long. So I apologize. I went a little bit longer in my opening than I intended to. That's my bad, y'all.
Hey everyone. So one point I wanted to bring up is one of the speakers before me talked about, the technological landscape of blockchain, that there's always a new coin coming out with better technology. But the thing you really have to focus on is network effects. So Bitcoin and Ethereum, the top 2, have the largest network effects of any coin. So no matter how good the technology is, it's very hard to beat a big network. That's like saying that, oh, this new social network is coming out that has better technology than Facebook. They're going to beat Facebook. That's close to impossible, for that to happen, just because Facebook is so widely used by so many people that, it's almost insurmountable for that to happen. And that's the same thing that's happening right now with Bitcoin and Ethereum to a lesser extent, but still, the network is huge. And over the course of the past 11 years that Bitcoin has been out, there have been thousands of coins. None of them have lasted as long as Bitcoin. Some have come and gone. Bitcoin is still here. And in terms of an asset class, it's been the best performing from that time frame, better than any stock or any other whatever. Bitcoin has been the best. So when you look at why banks and institutions are adopting it, they're looking at those factors. The other factor is, of course, the combination of decentralization and a limited supply. And you have to have both of those. So with the decentralization, the way that they secure the network is by having nodes and miners. So the more nodes you have, the more miners you have, the more secure the network is. And Bitcoin by far has the most. And because they have the most, they are the most secure. And on top of that, no one person controls the network. I mean, people try to throw in this whole thing about, China has a bunch of these miners, but even then they cannot control the network, because in order to even control or attack the network, you would have to have more computing power than, you would have to do what they're calling a 51% attack, which means you have more computing power than most of the network, which nobody has. So from that standpoint, it's incredibly secure and it can't be controlled because no one person can add or remove transactions from the network. So when you look at why big institutions are adopting it, that's those combination of traits are why we see the adoptions. So like one site that you can look at to get a lot of these different metrics is Glassnode. That's one that I check out because they have really in-depth metrics on Bitcoin and Ethereum and a couple of other cryptocurrencies. So it's a real detailed site. Another one is Into the Block. Real detailed metrics if you want to get deep and granular and understanding the fundamentals, because the fundamentals of this are different from stocks. With stocks you have revenues, earnings, profits, things like that. But with Bitcoin, you have stuff like hash rates, number of addresses. You have, spent output transactions, MVRV. I'm probably going too deep into it, but it's something you really have to look into to get an understanding of why it's important. And if you really want to invest in it, and if you want to trade, these are some things that, it's great to learn about. So I just wanted to add those points in for Bitcoin. And for Ethereum, you got to understand with Ethereum, we're seeing an alternate financial ecosystem being built on top of the Ethereum platform. And that's because they've led the way when it comes to smart contracts and token standards. And every other smart contract blockchain that you see popping up, they're getting that, they got all of that from Ethereum, the smart contracts and the token standards. That's what we're seeing right now. We're seeing NFTs become a big thing on Ethereum. That's why DeFi is big on Ethereum. Like, they are the innovator in that regard. They're the largest in that regard. There are a lot of people coming for it. There are a lot of great projects coming for it. I mean, really. But at this point, Ethereum is still number one. They have the DeFi space. They have more decentralized applications than anybody. They're the leader when it comes to token standards, whether it's ERC20 tokens, which act as are fungible, which means they act like cash, where $1 equals another dollar. They have non-fungible tokens, which are hot right now, NFTs, which people are using to buy art. They have what are called security tokens, which I believe in the future, you're going to be seeing stocks traded on platforms like Ethereum because they have a security token standards, which they've worked with the SEC to kind of figure out, the ins and outs of how to trade securities on the platform. It hasn't taken off yet, but it's something that I feel like is going to be valuable in the future. And there's so much more room for growth in that smart contract space, especially in the NFT space, because right now it's art. But if you think about what it means to be non-fungible, it means that it's unique. Think about real estate. No one house is the same as the other house. No one piece of land is the same as the other land. Those can all be represented by an NFT. So the sky is the limit for Ethereum and these smart contract platforms. So I just wanted to add those things. I don't want to go on too long. I know you want to jump into some other topics, but I just wanted to add that.
No, I definitely second that, Cuzzo. NFTs is definitely something the family needs to look into.
Yeah,
I definitely love your sentiment on Ethereum, because if I were to, that's pretty much the crypto that I'm looking the most into as well. I definitely agree with you when it comes to Ethereum. So.
Super shout out to Alistair and Darius both. You guys gave us and Master, you guys gave us a lot of great information. I feel like this is something that we could talk about probably all night, and we may do a special edition where we just talk about Bitcoin and cryptocurrency, because it does appear to be a very hot topic. But I don't want to take away from the other topics we want to talk about tonight. So let's move into the central bank and their terms for short-term rates. So I'm going to go ahead and pass it over to you, Mike.
Yeah, central bank. Powell shared some words that kind of turned the market upside down for a little bit. He said that big word, inflation, that I guess nobody wants to hear. But he did say two very direct in regards to keeping interest rates low. He said that they're looking to keep interest rates low until we maximize employment, which is kind of pretty much looking to get back to pre-COVID employment numbers. And also, he wants to see that the inflation is averaging about 2% over time. Both things will take a good amount of time to get to. The labor, I believe, is going to be the toughest one at this point, because now we're approaching 12 months, almost a whole year where people have been unemployed. And once you hit that 12-month mark, you're no longer considered unemployed. You're considered labor scarred. It's a harsh word, but that's the term that they use, where pretty much you've been out of the job force for so long that you're not considered part of the job force anymore. So until we see increase in labor and also see an increase in inflation that averages 2% over time, they're not going to raise any rates, which I think it's great. But that kind of leads into how they're buying bonds and everything else like that. So I'm going to open it up to see what is your guys' sentiment on that. And do we have anybody who wants to speak on that? Oh, we got somebody. You're unmuted. Can unmute yourself.
Hello?
There, we can hear you.
No, God, no, you know what? It's the question I had was actually, I didn't realize that I kept my hand up. The question I had was regarding the cryptocurrency, but I know you guys moved away from there. So if anything, if you guys have like a session afterwards, I'll just ask that question then.
Okay, cool. Anyone else have any questions or something they would like to add about the Fed keeping the interest rates low? Maybe how it's affecting our bond market because they're still buying.
I see Kevin's
Buying
hand
them up.
up. Kevin, go ahead and unmute yourself. You've been unmuted.
Thank you. I was seeing a bunch of news about Operation Twist and how that was attempted several times. Is that something that, for anybody who's more versed in that, that's something that we feel like they would do in a pinch? Like if they felt that inflation was getting out of control 6 to 12 months from now, or is it even really all that effective? Like, I don't know. I thought it was back and forth and the little I was reading. So I figured I'd throw that out there as well. As a question.
Operation Twist, the reverse monetary policy. Is that what you're referring to?
I believe so. I think it was when they would sell the short term and then use that to buy the long term to kind of force the curve to look at the way they wanted it to. But still pretty new in terms of my understanding. So I was just wondering if that was everyone feels fine that this inflation is healthy at this point, but just wondering what things would look like if it ever got to that point.
I would have to read up more on that. I'm just looking over it right now. That's actually kind of interesting. But to me, it looks like a rob Peter to pay Paul type of scenario where you sacrifice the short to pay the long. That's a good question. Anybody else might have that answer? Oh, we got Darius back up. Let's see if Darius has that answer. If not, that'll be something that we'll come back to you with.
Yeah, I don't have the answer to that in particular, but in regards to rates, I do think rates are going to go back down because of the simple fact that, you know, once this $1.9 trillion is essentially created out of thin air, you know, the Federal Reserve is going to create this money, but in order to actually finance, you know, this stimulus, they're going to have to buy bonds back. So, and again, I may be wrong. I'm still doing my research on this, but from what I've read and researched, essentially, you know, when you, let's say a bond is going for like $100 and its yield is 10%, then, you know, that's what it is. But then let's just say the bonds drop down to $5, that yield has essentially doubled to 20%. So therefore, that's why institutions and, you know, big banks are going to move into bonds because they're looking at it, hey, I just found a chance to double my money. Why keep it in, you know, high growth stocks or in equities where there's more risk? And, you know, that's why the market crashed. But then with this new influx of money coming in, the government has to create 1.9 trillion, and therefore they're going to buy a bunch of bonds, driving the price of bonds up to, you know, $20 hypothetically. And because of that, now the bonds are only going to yield 5% when they normally yield 10. And that's going to drive, you know, institutions and big banks back into equities like stocks and, you know, other places where they can get like a bigger return. So that's it.
Appreciate it. We got Lori in the chat. She did say that is pretty much banks are jumping ahead, changing their rates, looking for a way to make up on the losses that they experience. Now, I did look up that twist. It shows that in 1961, the Fed did use it to flatten the curve during the Korean War, but it shows that it didn't have too much of a large effect. It kind of just, you know, prolonged what they had to do in the long term in regards to financial policy. So, I gotta look into that. It's more, but it's a quantitative easing and another tactic that they use. Now, one thing I do want to highlight is with them buying back all these bonds, that does impact our 10-year. And I know AJ was gonna cover that. So we'll switch it over to AJ to see how the 10-year is important to us.
All right, so yes, like Mike said, we're going to talk about the importance of the 10-year Treasury. For those who don't know, Treasury securities are essentially like loans to the federal government, where maturities can range from weeks up to as many as 30 years. But like I said, today we'll be specifically talking about the 10-year Treasury. The 10-year Treasury yield is used for things like such as mortgage rates and such, but it is also used closely to watch as like an indicator for broad investor confidence, right? So like, because Treasury bills, somebody mentioned earlier, and notes and bonds, they carry full backing from the US government. They're viewed as safe investments, right? So when we see investors running into bonds, it's usually because they're running into what they deem safe, which means that they have some type of fear or feeling uneasy about what's going on in the equity markets. So somebody asked a question in the chat about the relationship between bond prices and yields, and they are inverse of each other, meaning that they move in opposite directions of each other. So whenever we think of a bond price falling, right, that usually results in an increase in the yield, all right, and vice versa. Whenever you see the bond price fall, right, or increase, I mean, that usually results in a lower yield. One thing that was interesting that I got from Powell is that, I mean, of course, as you look back in history, guys, some of what we're seeing in terms of these rates and basically in terms of the yields rising is kind of normal, especially when it comes to the economic recovery process. One thing that I did notice though was the week before last, right, we went from a 1.4 all the way up to a 1.6, which created a like 3% sell-off in the market, right? But this past week, if you notice, on Monday, we started at 1.45 and ended on Friday at 1.56. But if you noticed on Friday, we actually ended with a little bit of green, which kind of signaled to me to be on the lookout for the upcoming week to see what the markets are going to do in terms of kind of giving the signal that we are kind of nearing the end of the correction and that a lot of the positions might have already corrected themselves. So something that we really all need to pay attention to. But with that said, that's basically the 10-year yield. So we can open up the floor to anybody that has any questions or anything that they might want to say in reference to the 10-year yield. Okay, I'm not seeing any hands.
No one wants to talk about anything except Bitcoin tonight, it seems.
No, I did see something in there in the chat where Ian highlighted that the mortgage rates have jumped along with the yields. Would you have any correlation for that?
Ian highlighted that the mortgage rates have jumped along with the yields. Okay, so I don't know if that's necessarily a correlation. I wouldn't necessarily see that as a correlation. I would definitely say more so looking into the reasons why those went up. I personally have not looked into that this week or paid attention into the mortgage rates, to be completely honest, this week. So that definitely is something to look into as a reason as to why they went up. But I wouldn't say that it's a correlation though to the 10-year between mortgage rates.
Ian, you've been unmuted. Go ahead and unmute yourself if you have something to share.
Yep. So I did ask that question. I did make the comment about the interest rates. So from my experience and talking to a few lenders and kind of just watching the market along with the yield, the interest rates happen to follow the yield. So that's what keeps the interest rates down. So as the yield went down over, 2020, I'm sure everyone heard the news of how the interest rates fell below, historical all-time lows and things of that nature. And when the bond yield spiked within, I think it was like a week or maybe even 2 weeks from the 0.97 to about, call it around 1.4, then it spiked up to 1.6. The interest rates also followed. So for anyone that's looking to refinance or purchase a home, I know that I recently purchased a home and I got a rate of like 2.5, which is obviously like ridiculous from a rate standpoint. And that was like when the bond yields were super low. And then I think over the last 3 weeks, they have significantly spiked and have surpassed 3% for the first time since July. I think it was July of 20. Yeah, July of 20, they've surpassed 3% for the first time since then. So I have noticed that they followed. So I've been trying to just watch that along with the yield, because the yield, as you all know, is very volatile right now. It's been fluctuating, but hanging around, call it that 1.4 to 1.6 was the height of it, but we'll see what happens this week. But yeah.
Yes, and I apologize. I think I did say that they don't correlate, but they do. I'm sorry,
Okay.
they're not inverses of each other. They actually do correlate. So my
Correct.
apologies. I meant that they're not inverses, but they actually correlate.
Okay. Yeah.
They actually use interest rates to basically judge and follow mortgage rates. So you're exactly correct, which is a correlation, not an inverse relationship.
Cool. Thanks.
All right, I'm seeing a pretty good conversation here in the chat. If anybody that is posting comments in the chat wants to share them with the group at large. I am seeing a pretty good conversation in the chat. I don't want to try to read through the conversation, but anybody that is in this conversation who wants to share with the group, feel free to raise your hand so we can unmute you. Okay, so Randy in the chat has asked a question about how the stimulus might affect bond prices. If anybody wants to speak to that.
Which was just passed on to the House, but
Yeah.
I'll let another cousin talk if they would like, just to. Is anybody raising their hand?
Nope.
Not anybody?
No. Mm-mm.
Come
Okay.
on, y'all.
I think some of the same people that have been talking are trying to give other people a chance to speak. I think that's what we have. And then again, we have people that are kind of answering the question in the chat.
Yeah,
But
I definitely think it will push them up higher, but I would like for somebody else to talk about it.
it's okay,
Yeah.
Derek. If nobody else wants to talk, you can keep talking. Oh, okay. Hey,
There we go.
Aki, you've been unmuted. You can go ahead and unmute yourself.
Yeah, I'm here.
Higher.
So we talking about Treasury yield or we talking about bonds?
Well,
So,
combination of both, just because we were talking about the relationship of, the price, the inverse relationship between the price of bonds and the yield, but it's up to you which direction you want to take it. I think he specifically asked about it in reference to
how the stimulus is
bond
going.
prices, not the yield. It's actually the price of the bond. So,
Well, in my opinion, the bond prices is going to be a lot cheaper because we're printing all this money. And I don't see us stop printing money because 5 years, well, COVID has literally pushed us almost 10 years into the future where tech is now ingrained in our lives, kind of like money. And it's showing the cracks in the economy and human capital, the value of human capital. And the value of human capital is going lower and lower because tech is taking over more and more of it. So I think we get I think stimulus turns into universal basic income. I don't want to see that, but I just don't see how we accelerate intelligence-wise to catch up to replace. Well, as technology keeps going faster and faster, how do we, keep ahead of it? Yeah, government keep releasing bonds, treasuries. Of course, the top is still going to buy it, but our economy is going to deteriorate. Well, I mean, I say deteriorate at a large level, but Jerome Powell was talking about deflation, like where prices come down. For example, everyone loves Tesla. When full self-driving starts and robo taxis start, right? Now the human that used to work for Uber and Lyft is no longer, able to make money because prices are so low. So now economic output, human output is at a lower level. So I just feel like, we're going to be affected negatively. And I'm going to leave it like that.
You want to give Darius an opportunity, Vanessa, again?
Yeah, sure. Darius, you can go ahead and unmute yourself. You've been unmuted.
Yeah, I just wanted to go over this is a very good book to read. It's called The Creature from Jekyll Island. It goes over essentially all this stuff of how the Fed works, how money's made, things like that. And it's important to understand where money comes from, and how it's literally created because, last year we got, like I said, $3 or $4 trillion put into the economy. This year we're getting a $1.9 trillion stimulus along with probably another, $2 to $3 trillion infrastructure bill. So it's important to know exactly where, the money comes from. And in relation to bonds, like I said, I think that, when money's created, the essentially the government creates bonds, out of thin air, and they sell them to the Fed. The Fed is not a government organization. It's not a government organization. It's owned privately by people and organizations around the world. It's not like a branch of the government or anything like that. So this is quote unquote our central bank, and the Fed will buy these bonds from money that they literally create out of thin air, or they do a keystroke, and the money's there. The $1.9 trillion is there. So I think that's going to drive the bond prices up, and yields are going to drop temporarily. But then also, when this money is being created, it has to be lent out, it has to be dispersed to all the governmental agencies, the state agencies, banks, things like that. And something that this book goes over is, in essence, fractional reserve, banking and lending, where if I'm the Fed and I receive $1,000 from the government, I can lend out up to 900 of those dollars, and then take that 10% and loan out another, $900 off of that. So then you run into the issue of there's way too much money out there. And if, people wanted to come back and redeem the bonds or things like that, then it will cause things to crash. But I'm not finished with this book yet, but basically, I feel as though we're kicking the can down the road as far as the Treasury yields and all this fiscal policy and all this money being created, which then ties back into what we talked about earlier, is the with cryptocurrency and Bitcoin. Since there's a finite amount of cryptocurrency, you can't mint new Bitcoins to respond to economic crises. You'll just have to deal with what's there and do it like that. But like I said, I think with the stimulus, the bonds are definitely going to go up, but the yields are going to go down, and that's going to cause a run into equities again, and we're going to have another bull market. So, and like I said, like I said with the Fed, just always remember it's a private organization, man. It's not government backed, and they're not regulated either. They're not regulated by any governmental body. So in essence, they can kind of do what they want, in regards to monetary creation and influencing monetary policy. They're to me, they're like the biggest shadow bank out there, and that's something that's very concerning on my end, because again, the government and the Fed are like this hand in hand, and controls so much of our lives. So
So I agree that most of the people that do support Bitcoin are basically people that are looking for a change in just the way we think about money, and they're looking for a decentralization of it. So that's an excellent point that you made there, just about how no one really controls it, so to speak. So I think that's a really good point. Again, I still just have the same question, though, to your point about how printing money at whim essentially like devalues it, and it also distorts the price of other assets that are dependent on money. But if you can just make coins, isn't that almost the same thing?
Well, to an extent, yes. But again, you can't fractionally lend Bitcoin to my knowledge. And again, when these creators make cryptocurrency, they put a limit to the number of coins that can ever be produced. I don't know, like I said, I'm not that deep into crypto, so I don't know if it's something they put in the programming or on the ledger to where when, Bitcoin 21 million, when the 21 millionth Bitcoin has been produced, then it's like, and it can't be produced anymore. And that will intrinsically cause a big spike in demand. And then therefore the price of Bitcoin will go up. Like I said, as opposed to our government, which can essentially, or the Federal Reserve, which can essentially, with a keystroke create, $1.9 trillion out of nowhere. Again, this money didn't exist prior to, the government basically taking a sheet of paper and writing a bond, an IOU on it for $1,000 or whatever, and then quote unquote selling them to the Fed. But then, like I said, once the Fed has bought these bonds and given the money to the government, now, the government can give it out to banks. They can give it out to like a Chase bank, or they can give it out, the guy that said that he, refinanced his mortgage, they can give it to a guy like him. But you got to understand, the bank takes that and creates more money out of that to give him. If you don't know, like a lot of our mortgages and debt isn't, you're not getting debt from another person, you're getting it from out of thin air. And that's that's like kicking the can down the road, because eventually, as Malcolm X said, the chickens have to come home to roost, and we're going to be like in a huge fiat crisis, and that's going to crash everything unless we find a way to adapt to where, adapts like a decentralized currency, something with a finite supply. If you think about it, that's the reason why we don't buy any other country's bonds. Like I don't know anyone that owns an Irish bond or a Greek bond or a Venezuelan bond or something like that. They buy our bonds because they know at any time that they can come to Washington D.C. and say, hey, look, we need our money, we need our yield, this, that, and the third, and we're good for it. Those other countries aren't good for it, and that ties into my point from way earlier, is to say that a lot of these countries like sovereign wealth funds, which I'm still researching, I'm still researching that, like where the countries put their money, they should tie that up in cryptocurrency, because it'll give their currency some meaning, some value that other people may want to invest in it and boost their economies. You get what I'm saying? So
Yeah, no, I definitely think that this is a bigger conversation that we have to have, just looking at some of the comments in the chat here.
For sure. And I definitely want Kazos to understand that, Bitcoin and blockchain aren't synonymous. Like,
exactly.
I want people to like research and understand that concept as well. Like blockchain is actual technology. That's the foundation that Bitcoin lives on.
Yep. And to add to that, the blockchain is like you said, it's like the platform. It's kind of like let's just take the come up, for example. You have the YouTube show, you have the Facebook group, and then you have, what we're doing here, like Sector Saturdays and things like that. That's what the blockchain is. Obviously that's the stored value, but then you have other purposes for Bitcoin, like, with the XRP, which is, if the United States needs to send a large amount of money to Japan to finance a construction deal or something like that, with XRP, they can send over 50 billion in about 5 minutes with minimum cost. I think another area where the blockchain is going to shine at is in healthcare, with healthcare payments, insurance payments. And then also I was thinking, like, you guys were going over like these NFTs, and Square just basically cashed Jay-Z out, for a significant portion of title. So now I'm thinking, like, they might use these NFTs, and Square is so integrated in the cryptocurrency they might change the face of how we buy and consume music. We might
Yes.
now be able to get one-of-one Jay-Z album if you pay for it. You get what I'm saying? Like you might
And
get
how
that
artists
unreleased
release their
Jay-Z
music.
track or something like that.
And how
I didn't
artists
hear you.
release their music.
Exactly. So
Yeah, that's going to be huge. That's definitely going to be a game changer. So I encourage anybody to read up on the blockchain technology as well as NFTs and just kind of get insight as to what the potential deal between Square and Tidal could really be and what might and will be.
because first I didn't understand it. So
I don't think the Cuzzles get it. So I'm gonna break it down because I need everything broken down to like, the simplest form for me to get it. So the way I got it was, remember how when everybody said, yo, sneakers is gonna be new currency? I didn't understand my cousin when he would go and buy all the J's and everything and, hold them. And now he got a closet full that's worth, thousands and thousands of dollars. Consider NFTs as the way of doing that, but for digital content, for creative information. So a painting, a Picasso, let's say, a Banksy wants to come out and you want to get a one-on-one and he gifts you one and it has a NFT on it. You actually have a way to verify that it's an original content, it's yours, and you can track it. Not only that, you can monetize it.
Guys, and the thing about it is it's already in use today. Like if you, I think a lot of people have been saying Top Shot in the chat, like NBA is currently doing the same thing. So it's like a digital form of a card, right? So how we used to trade Pokemon cards back in the day, they're doing digital NBA cards, right? And they're trading them. And you can actually see, because it's actually on an NFT based system, you can actually see who actually the originator of this coin was. So you know that it's not a fake card, right? Everything is tracked on a ledger-based system. So you know you're actually buying and trading something that's actually real. Does that make sense? So it's actually cool. I think it's going to definitely already in our future. So I definitely, encourage everybody to look into it.
So we have to unmute Kevin. I already know what Kevin's going to talk about because he feels like he missed his opportunity initially, but we have circled back to this conversation. So Kevin, go ahead and unmute yourself. You've been unmuted.
Thank you. Just going back to the NFT stuff, just imagine you're talking about one-of-one albums or even just 10 or 100 digital copies of those albums. Like you could sell your album for $9.99 to the masses, or you could just sell 100 of them for 5, 6, 7, 8 figures. Like how much work you just put, like you could actually have a deluxe album. Like, all right, I'm gonna release 18 tracks and 12 of them are gonna be in a normal release, and these last 6, this is the only way you can get these last 6. So if you want to sell, like imagine, okay, I got one of 12 of the 18 track albums that Jay had. Like how much you think people are gonna try and spend for that? You can literally have digital museums. And that's not going anywhere. That's not going anywhere ever. Like imagine you get LeBron James dunking on somebody game 7 to win the finals. Like that's going to be major. Like they're just going to print money for whoever is putting them out. Like the NBA is going to make some amounts of money off top. It's only going to get better. Like that's in its own thing. But I want to talk about Square with their becoming a bank as of earlier this week. I was doing some research on, I feel like I'm writing an article for like Speaking Alpha, but to disclose, I have some ARC-F contracts. And I was just reading up on a little bit in terms of payments in general and kind of the overall landscape of how it is. And with merchant acquirers to the network, to the issuers, kind of that pipeline of when a customer pays for something, when the business is able to accept that payment, when Visas and the MasterCards funnel it through their networks, and then when the issuers approve it and send their money back, and how everybody is taking their piece along the way. I think it's pretty dope for Square and those payment aggregators to step in front of that chain. They kind of take their piece of the pie, they add their own value, and essentially with how they're providing all of these different add-ons for what the customer, the small to medium businesses are able to do with inventory management. And you've seen this Sector Sunday with all the other value they provide. But if they're becoming a bank, and then they can also lend out money to the small businesses, but also create deposit accounts so that Joe Schmo on the street can have a Square bank card and pay something at a business, basically on both ends of that funnel now. So like they're able to accept the payment at the beginning, go to their merchant acquirer, and then run through the network. I don't know if they'll ever try to become a Visa or MasterCard, but once it gets down to the funnel for the issuer, they're the issuer, they put the approval on and they take their cut as well. So they're eating twice off of this now four-part chain. And it's like, what's the future for that? Are they going to step in and just become the payment aggregator / merchant acquirer now, or like try to eventually envelop the entire system? Like that's kind of enticing its own thing to think about in terms of what that could look like. I just wanted to talk about that in terms of like that it opens up a lot of doors now that they're on both sides of the fence.
Definitely agree. Definitely agree with you, Cuzzo. But like I said, I don't want to carry this on for too long for the sake of time. I'm going to go ahead and pass it off to Tayo for us to talk about some GDP stuff.
All right, what's up, everybody? So if you've been paying attention to the GDP forecast, basically a few things. A few weeks ago, Goldman Sachs basically upped their forecast. They see basically because of the COVID vaccines working and COVID cases coming down. Also because they've been seeing a lot of growth in productivity as far as like manufacturing, the demand for goods, productivity been actually been at this highest level since like 2018. So the forecast growth, they up theirs from like 6.6 to 6.8% for 21, for the year 2020-21, and like 4.5% for 2022, which is up from 4.3. That's also based on like seeing the STEMI also passed as well. Just for like reference, like in the last quarter, we've seen economic growth hit about like 10%, which is basically they did not expect to see that. That was pretty high on people's radar. We also seen employment kind of be a little bit shaky, but I think some people kind of see a little bit of optimism from this last recent jobs report. I think we did very well. So a few things I think personally, I think it still means we're underemployed. I think maybe some people return to jobs that they already lost. So I don't really think the unemployment numbers are still looking that well. They're still shaky, but as far as everything else, as far as manufacturing, goods, services, that's been kind of increasing tremendously in the past few months. So something to be look out. And this is in comparison, I guess you're gonna say America's mortal enemy or rival, China's. They also up their growth. They expect their growth to be over 6% for 2021. Just for reference, they were the only ones to have like GDP growth for 2020. So they had like a 2.3%. It's even seen as, and everybody expects them to see even more growth this year as well. So just something for reference. Oh, so it's open if anybody has anything else to say that they wanted to talk about in regards to the GDP.
I see you still have your hand raised. Did you want to talk about this, or did you have your hand raised for the previous conversation?
It was a previous conversation. I mean, regarding GDP, if the COVID strain doesn't mutate again and the vaccines continue to work, I do see GDP growing, but it may hamper or slow down if there's any other issue that we run into throughout the year.
Yeah, I agree.
Mm-hmm.
I had a question in regards to because I did look up into this, and on our last sentence Saturday we talked about productivity increasing with the people being more willing to use technology in their processing and leverage technology in their businesses. How do you feel that we would move forward now that COVID pretty much pushed us 5 years into the future to where technology has been a major part of how we got through COVID. And it's basically shown that we can operate differently than what was the societal norm pre-COVID.
I think that there's going to be jobs that were lost that are just not going to come back, right? Because we essentially changed the way we live in society on a day-to-day basis. But I also think that new jobs are going to be created to replace those jobs, so it could kind of balance itself out, so to speak. Because I mean, even if you think about like your restaurants, right? Do we think we're ever going to see restaurants that are going to be indoor dining to full capacity again? Maybe not, right? But there's an increase in delivery, takeout, people eating outdoors. So I think even though there's going to be situations where we're not going to go back to the way things were pre-COVID, I think the evolution that we've seen is going to lend itself to the creation of new jobs, particularly in technology. So maybe there's going to be people going to school more to get those technical skills so they can move into more tech-related jobs to keep up with the change in what we're seeing in the job force. But I'll go ahead and unmute Darius. I see you have your hand raised. Oh, I think you're already unmuted, Darius. You can go ahead.
Yeah, I just wanted to raise my hand, but I think what's going to happen, my opinion in regards to the GDP and projected growth is I think that eventually vaccinations are going to catch up to the point where we achieve herd immunity. And I think Biden wants to kind of get this thing rolling so that his narrative changes as the COVID president, into more of a narrative of I'm the president that saved the economy and got our growth going back up and stuff like that. So I think with that, and then when you combine it with a pent up demand for people to go outside and people to experience things, I think it's really going to bounce back really heavily in like maybe this end of the second quarter and the third quarter, as far as like, GDP and jobs and stuff like that. And then in regards to your comment about, COVID accelerating technology and jobs to the point to where, some people are getting their jobs back. I also think that, in places that, jobs were fundamentally changed, like, for example, with remote working and things like that, for a company like Microsoft or Google, that's a lot less revenue that they have to spend on employees on, housing them in a cubicle, giving them, computers to work with and stuff like that. So I think that money that they save from, repurposing employees and having them work remotely is going to be either, invested back into the company to drive, further innovation, or, it's going to be, put somewhere as a cash balance or something like that. But I definitely think our turnaround is going to be a lot bigger than what, people expect, because of the fact that vaccinations are going to, they're going to reach a level to where, herd immunity is going to be there, and there's a really pent up demand for people to go out and do stuff. You can see it in Atlanta. It's All-Star Weekend, man. You would think that, COVID's not happening at all. So eventually, once states start, loosening the reins and saying, hey, we can go out and indoor dine, we can go out and go to movies and stuff like that, that's going to be a huge, driving force. So,
Darius, you can't use Atlanta as your example. They never acknowledged COVID to begin with, so
I agree.
You can't use them as a comparison.
Right.
Just use Houston. Just use Houston.
Well, not even that. New York and the Bay, they opened up movie theaters now. In New York, they have it to where you're at 50% capacity. You can go back to the movies. And in California, they have it at 70% capacity, but they have it to where you can't get food there. No concessions. You have to wear your mask the whole time. So,
well, we don't have to wear masks in Texas anymore, so I don't know how that's going to play out. But
in the words of TiVo,
Atlanta. What?
In the words of TiVo, God bless you.
We might be the new Atlanta. I don't know. Patrick.
We can never be the new Atlanta. Atlanta's the new Atlanta.
Yeah. So yeah, good point, Darius. We're gonna go over to Patrick. You are unmuted.
So yeah, my question would be for GDP as we move over like to tech. As we know, the tech hub is really China. How do we get rid of like the disparity of GDP from U.S. and China? Like, how do we shrink up the disparity in GDP if most of our production is coming from foreign countries? If that makes sense, because GDP accounts for any multinational company that operates within that country's realm, if that makes sense. So how do we actually get GDP to grow at a constant rate if we are continuously outsourcing?
So if, in my opinion, I think that's the way to change that. And I think that's kind of apparent from COVID. A lot of people realize that our dominance, I mean, why is I'm going to mind for our dependence on outsourcing was a really big factor to us on our supply chain. A lot of companies realized like, hey, we kind of a little bit too dependent on these other countries. We need to figure out how to localize everything. So that's why I think you're gonna see like a big surge in spending on 3D printing. So everybody can have like their little local satellites all throughout the world. So you have companies that like can manufacture. I mean, even with e-commerce, it's going to be the same thing too. Where look at how Best Buy wants to start now making distribution centers. Same thing with Walmart, Amazon. They want to basically create little satellites of like manufacturing. Especially when you see the increase in spending spots with robotics too, you see the same thing too. There'd be like little warehouses. Like a lot of these buildings are gonna be just basically like little autonomous robotic shops. I really believe in the future, like in the next 5 to 10 years, all these little abandoned buildings that's been like, there's gonna be like robotic little warehouse shops that people can put out and produce goods. But that's how we combat that. Like, because a lot of people didn't like how we was. I mean, we're already looking at investing and creating chip companies right here, like spending money. Like, I mean, they're going to Biden. I mean, so many software tech companies are like, hey, Biden, let's do something about this supply chain issue when it comes to chips. So yeah, we support this bill. Can you like give some type of like subsidizing for this? So
And I always thought that we outsourced like as a means to lower production costs, which meant that, you know, the consumer basically would be in benefit there, right? So then we would be able to, which essentially would increase the revenue for the US economy. In my mind, as long as you're outsourcing, you know, to lower your production cost as a company.
Then in regards to the outsourced production, you got to remember that even if the production's outsourced, the product and the sales, eventually they all come back to the United States. So, you know, that's something you got to consider as well.
yeah, I think it's like most of the concern. I think the question was like the concern because I think China like exported like what 200 some crazy $1 billion worth of amount of money. I mean, worth of goods to the U.S. So it's kind of like, hey, like if we're spending money and China's getting all the money, and then like we spend money and like everybody, we're not really exporting as much. Then I think that's kind of like the concern some people have. But
Someone in the chat suggested a book. This is a very good book to read. I posted it in the group as well. It's called The Future is Faster Than You Think, and it goes over, you know, what we're talking about as far as people losing their jobs and things like that. Because AI and technology is going to take our jobs because of the fact that it's cheaper. And, you know, you can, you know, instead of paying an employee that gets sick and calls out and argues, you know, $50,000 or $60,000 a year for 20 years, they'll invest for a robot or an AI to do that. And in the process, people think, you know, a big concern of AI is they're like, oh, you know, the AI comes and the AI is going to take all our jobs and automate everything, and people are going to be outside on the streets. But you know, in the book they say that a lot of people's jobs will be repurposed into something where they work with the AI, so that way they're not, you know, you know, out in the streets or whatever, or they're not, you know, unemployed. In fact, it's, you know, people that work, you know, manual factory jobs will get you know, very marketable skills when these you know, machines come in. So that's a good book to read, man. So
I doubt that the amount of jobs will be created with. I feel like it's still that number is still gonna be so disproportionate though.
but you gotta think about it. During like the internet boom, you know, a lot of manual jobs, like for the like, all right, from the newspaper to from like the physical newspaper to online articles, that eliminated a lot of traditional jobs, but those jobs got repurposed into online editors, website designers, you know, things like that. So I think that, you know, going forward, it's gonna have a lot of the same type of trajectory to where you know, where manufacturing jobs are going to be repurposed into, like I said, you know, some type of robotic engineer or robotic assistant or something like that. But, you know,
Yeah,
could
but
be.
like even in that regard, though, like so, like instance, for like a plant that that's one of our plants. So I work over like starters, alternatives for like vehicles, and like I mean, we're looking at investing into basically adding a lot more robotics on our lines because since COVID, a lot of people haven't been coming back. So like when I mean, well, when people wasn't coming back, when the whole lift was lifted or everything, when all the like uh curfews or like the restrictions was like lifted, people weren't coming back still because they was getting a paycheck or unemployment, whatever like that. So the job, I mean, industry was like, well, we're gonna look at invest in that. It's gonna look at when we implemented those robotics onto our assembly line, it's gonna take away like 80% of our labor force. We're gonna leave like maybe 15% that's gonna work with the robots.
Oh wow! So they're not going to repurpose any of the employees to actually
No,
run the
we
robots
are.
or the.
We just don't need that many.
Okay.
So
And
it's
that's
like
what I was gonna say. Like, I do feel like certain jobs will be repurposed, but the whole thing is for the efficiency side of things. So it's like you just need less people. So yes, certain jobs will be, but not to the amount that I think will fulfill everybody's needs, if that makes sense. Like the demand.
yeah, I mean, I think there would be like brand new type of jobs we wouldn't even think of. Like
exactly,
Kathy was talking about like, content creators. I think content creators are going to be probably the biggest things that a lot of people are going to look into doing in the future. I think content creation. I think YouTube channels are going to be big, personally.
All right, so we've got some hands raised in the chat. So we'll go Ake, Mansa, and then Lori. We'll just go in order. So Ake, you have been unmuted. Go ahead and unmute yourself.
Can you hear me?
Yep.
All right. So regarding technology advancing 5 years, let's talk about remote work. You know what industry is going to benefit from that? Real estate. Because now I can work for Facebook or, you know, any airline or anything IT and be remote and live in a city or state, you know, where my income goes a lot longer than if I lived in California. You know, that's why you see a lot of people leaving and going to Nevada or Texas or even Atlanta. Now, that's also going to destabilize the local market in the event that if I remote work and I work for Facebook, but I made $150,000 in California, but now they cut my salary to like 90, but 90,000 in Georgia is like, you know, 200,000. You know, now prices get ballooned, people start getting pushed out. You know, so I guess it's a pro and a con regarding robots and automation. If 70% of our economy is retail and jobs are getting pushed out, you know, that's less people buying stuff, which affects the GDP. You know, I don't think if it's going to be an offset in goods produced unless we're exporting them to China. Regarding China and the whole trade war situation, everything we're talking about selling and everything, it still needs raw materials. So we need to see who controls the raw materials is the ones that's going to benefit, unless we start, you know, making
That's
synthetic
China.
materials.
China has a. I was laughing because I remember when I was reading that, I was just like, damn. So we basically, are there kids online? Well,
it's too late now if there are.
I ain't tested that. I was gonna say we're in an effed up situation, but yeah.
Nah, it's good.
I mean, yeah. So like, so TSM, Taiwan Semiconductor, it's about to build a plant in Arizona, right? Now, What if the raw materials they need for this new plant, there's a shortage, and they work with China, but the political situation destabilizes and then cuts off their supply chain on the materials needed to build U.S. chips. And the political destabilization was caused by something the U.S. did. You see what I'm saying? See how everything starts to become more connected. So there's more risk involved than what it used to be. And we blame little boy blue Intel, but if they get it back together, and they got their own factories, while AMD and Nvidia and everybody waiting on the China situation to evolve to something more positive, Intel can gain ground. So that's just an idea.
Oh yeah, what Patrick just said. Yep, they are like Debo.
All right, we are going to Mansa next. Mansa, you've been unmuted. Go ahead and unmute yourself.
Yeah, just speaking to the conversation about the job loss. That's been one of my major concerns lately, is just a couple things with it. In that earlier it was kind of compared about the tech shift and jobs, but I think a big difference here is that it's more automation and AI. So we're not going to have people controlling the machines. Another thing that big concern is the transfer of job loss, is that we're transferring from low tech work like manufacturing and jobs like toll booth takers and longshoremen they're looking at replacing. And who are those people that are going to get the jobs that are going to replace it in tech? What do they look like? So that's been my big concern, is if we do transfer the types of jobs, who is going to get ahead of the curve, and who's going to be the people that's going to get these new jobs in the tech space that's going to be replacing the automation jobs, the jobs getting replaced by automation.
I think I have an answer to that. I don't know if you guys been following, but a lot of the FANG stock companies like Facebook, Google, Amazon, they're making it so that you don't have to have a degree to work for them anymore. So they're more hiring off of skill based versus you actually having to have like a bachelor's degree in computer engineering or hardware coding or whatever. So I think that problem's going to not be that big of an issue. And then with you guys focusing on like the manufacturing and stuff like that, you also got to remember that there's other sectors of the economy, such as like the enjoyment sector, the recreational sector. So I think that industries around that will kind of spark up more in response to lost technological jobs. I don't know if you guys have been following Microsoft, but they came out with like something called Mesh, where I guess you can work virtually or something like that. There's going to be jobs that are like exclusively in the virtual world, to where you clocking in and you putting on the headset and you're virtually working, or you're working in a completely virtual space. So you're not even going to be in a physical space. You get what I'm saying? You might be like even in regards to like this blockchain stuff going on, you might be like an NFT auctioneer or something. You know what I mean? So with the AI and autonomy, there's definitely going to be a lot of new jobs created, but you just got to kind of expand your focus to other sectors of the economy. Like, for example, you might, as far as entertainment, you might be a virtual club host, or, something like that. So,
I mean, just look at the people that are on like Clubhouse, and literally like their only function on Clubhouse is to moderate rooms. Like that's their job on Clubhouse.
But imagine if a company finds a way to monetize that, to where, in the future, presidential debate is held quote unquote virtually, and you could be a virtual ticket screener or a virtual moderator. You get what I'm saying?
Yep. And then to your point about not needing degrees and stuff, and I think a couple people said in the chat also, a lot of the bigger outfits like your Googles and your Facebooks, and I'm not sure about Microsoft, but they have like free certification programs where you can go through and take training so that you can work with them. So
They
Um,
had to, y'all. The demand isn't there. The
yeah.
demand for people going to school isn't there. That's why exactly majority of the people that are in AI in schools in America are from abroad. Only 80% of them actually stay in America and continue to work here. That's the issue, is that we're not exposing our kids at an early age to the technologies and to the future for them to understand that the job shift is different than what you learn in kindergarten of being just a doctor, lawyer, the basics, right? So yeah, it's definitely going to be interesting. That's for sure.
Did y'all see that stat I put in there? I put, as she said, AJ said everything that said that they were saying about the AI, that 80% are from like foreign countries, and luckily they stay. If they didn't stay,
it would be terrible. We would be screwed.
It would be horrible.
We would be screwed.
You ain't lying.
Like our people are not the ones going to school for this, which is scary. Because you got to think about people who are testing, like majority. That's why, when it comes to AI, when it comes to biometrics and all of that, like the future gets very scary because it's not diverse in terms of the creators.
Mm-hmm.
So you have no representation in terms of the diversity of you when it comes to tech being created, essentially, right?
Even though we're the biggest consumers of it.
Exactly, Darius.
Yeah.
Exactly.
Laura, you've been unmuted. Go ahead and unmute yourself. Before you start though, question in the chat, Goldman Sachs forecast represents 2020 or 2021?
Oh, I did not even see this slide.
2021, right? Does he mean 2021 or 2020?
This right here is this 2020?
Let me
That's
ask.
for 2020.
Might be 2020 because it already has Q4 information in there, so it's got to be 2020.
Yes, that's their forecast for this year.
It's for this year.
2021 though, right?
No, that's for 2020.
Yeah, that's what I thought. Yeah, what's on this slide is for 2020.
Oh, it does have Q4. I could barely see that, y'all. Y'all got good eyesight.
Just have a big monitor.
Yeah, that's really it. The big
That could be it.
Really it. I'm sorry. Lori, go ahead. I'm sorry.
No, it's okay. I had the same exact conversation with my coworker this morning, where she's not like us, but for her, she didn't see that. She's excited about the future. She didn't see that it was going to be a problem, that that the businesses were replacing the workers with artificial intelligence, and the manufacturing process was going to change. Her statement to me was, if I was a business owner, I think that, that's the best thing that's in place, because I have to think about my business and I have to think about how I'm going to keep revenue coming into my pocket. And I said to her, but what about the employees that were part of your process that was bringing in funds, and then also they're helping your company to move ahead? You don't have concerns that, now that they're on unemployment, do you go back and then let them know that you're not going to rehire them because you've replaced them with robots, or you replaced them with AI? She said, no, that's not my concern. But then again, I said, well, if a majority of these corporations are going to do this, is there a law that's going to be set in place to say that these corporations have to give notice to their previous employees, so that they know that there's a shift that's being made? Your job is not guaranteed. You may not come back. You have to start thinking to look for something else. If not, then how long is the government going to be able to support people on unemployment? Because once you pass 6 months unemployment, then that means you no longer have benefits. If you no longer have benefits, you no longer have coverage, then that puts you in a situation where that increases the gap, where a lot of families that can't afford to not have health coverage if something happens to them, and then they start dipping into their savings in order to cover medical expenses. There you go. We have the same situation that's going on where you have the rich get richer and the poor get poorer. So it's something to look into. I'm all for, the manufacturers with, I understand that, because of COVID that they have to keep their businesses running, but they also have to be, they have to think fair, because it's not about the dollars all the time. You also have families that are behind that, that have helped the businesses reach the point that they're at, but they also have to put systems in place to keep those employees in the line by providing them with training so that they could continue to allow for the business to grow. Or else at some point in time, the same businesses that have let go of those employees are not going to have customers that are going to come in to support their businesses, and then they're going to be put out of business.
Good point, Lori. Good point. Only thing I would say to that is that we got to understand that the world is cyclical. Right now, with all the innovation that we're having to look into the future and look at it with new eyes. I had this conversation with somebody who's a little bit older that works with me, and they were having trouble operating Outlook. So, and a tech-heavy future is not something that they would want. And I try to, show them to come up and show them, listen, you have a nice little nest egg now. Your benefit would be to make work not part of your future, make labor no longer part of your future. Start now investing, building that up so that in the future, you, your kids, anybody that comes after you, you won't have to worry about transitioning or transferring your time for income. And I think that's why the come up is so important right now, is because right now is where we got no time for games, no time to play around and half step. We have to stay ahead of this curve.
Yeah, and even like those that are like highly skilled and that have gone to school to get the degrees, they're concerned also. Because like there's a doctor that I came across. She has 30 years of experience and she's worried that, her job is being replaced by cheaper labor. They're no longer asking her to come in, and they're having like physician assistants or nurses that are providing guidance over Zoom or telehealth or online. And then so imagine your child is sick, you're not allowed to go into the hospital or the venue, but the doctor is telling you what to do over the internet of how to cure your child. Now, who's going to guarantee that there's not going to be malpractice when it's not the doctor? It's a physician assistant or a nurse who has less experience over a physical doctor.
Well, Lori, I'm gonna talk in regards to that because I think there's a scope that they can just cover in regards to those in regards to telehealth. Because me being a nurse, we can't really deal in regards to like diagnosing a patient or even just taking care of them without the doctors telling us what to do. So I guess in regards to that, it's still in a trial phase, so we still don't know what to do about it. So I can just say that we still need the doctor's guidance in regards to that.
I agree.
Yeah.
But still, if we're switching to AI, who's programming the AI? Who's taking the lead?
It'll be people. And like I kind of have a little disagreement with some of your point in regards to businesses needing to have a quote unquote human element. As far as capitalism is concerned, businesses' sole and main objective is to make profit and to return money to a shareholder. So if I'm a shareholder, for example, and say Microsoft, I'm going to be more inclined to invest if they say that they're spending money on AI that can code software And let's say for this AI software, you know, it costs $100,000 that you pay for once, versus saying that we got to hire you know, 5 engineers at $90,000 a year to code for the same solution. You know, I'm going to, as a shareholder, I'm going to say, you know, I want my money with the AI. But I also believe, you know, with AI taking our jobs, I firmly believe that it's going to create more jobs than it takes. Yes, some of the low-level jobs are going to be taken, but then also, you know, this innovation and stuff doesn't happen overnight. You know, there's you know, trial error. So in the time that it takes to get from concept to, you know, full, you know, capacity, there's going to be people that are needed in between those processes to you know, sort things out, and that's where some of the repurposing will come in, is actually development and maintaining this AI, so that, you know, people aren't fully out of the workforce. And then the point that Mike said is that we've been taught so long to basically, you know, our minds are trained to work for 8 hours a day. You know, once AI gets to the point where a lot of these processes are automated, we'll have a lot more creative time on our hands to do things that we actually enjoy, and possibly even monetize things that we enjoy, versus, you know, going to work for somebody that, you know, we don't necessarily want to be at their, you know, place of work for 8 hours a day. So that's you know, my point to that.
Loving the conversation, y'all. Y'all, this is dope conversation.
One thing I would add is Jolene has a phrase that I like immensely. I don't work, I create. So that phrase right there helped change my mindset going into the future. And now where we're talking about this non-fungible tokens, that's another way for us to secure income and create businesses. It's no longer the original business models of, you know, create a product, sell a product to people that are outside, or do any kind of laborious work. You can be paid to be creative. So that's one thing that we need to create in our communities. We need to foster the creatives that we have. You know, if a kid says, yo, I like graffiti, do that. You know, oh, I like to make music, do that. You know? Look somewhere outside of just, you know, creating tangible assets.
Then another point that I forgot to mention is, you know, with the innovation and the technology, eventually, you know, technology and stuff is going to get so innovative, and things are going to be so, you know, polished and pristine as far as the processes and the ability to scale product and service, that there's going to be a huge influx of money, you know, that these technology companies are making. And I think, you know, worst case scenario, with the automation and the AI taking everyone's jobs, I think personally, and this is just me being a little bit of a conspiracy theorist, that the government is going to somehow implement a universal basic income for like bottom, you know, 20% of people that can't find work no matter what. Or these technology companies are going to be the in-between for providing social welfare for these people that cannot you know, transition into this automated, you know, revolution. But at the same time, because they've innovated so heavily and scaled so exponentially, they'll have the excess, you know, profit to do that. So,
well, yeah, that's actually a discussion now. That's not even like a conspiracy. That's actually a discussion now.
Oh wow.
They're talking about data, because they're talking about, I mean, think about it. This data wasn't created out of nowhere. It came from us. So now the conversation is, if you created all this automation from us, then why shouldn't we get compensated for that? Nobody never asked us to participate. Nobody never asked. That's the argument based on it. Like, the argument is based on you've advanced the technology and everything based on on these people's data, and they never was told to be participated. They never been compensated for it. They need to be compensated for that. So I think that's the conversation now between what's they call AI Justice League or something.
And then also, as far as AI as well, there's another you know, sector of employment that I think is going to be created with AI, is like you know, ethics, robotic ethicism, artificial intelligence, ethicism, because with this AI, you program it to do a certain thing, and you might, for example, you might work for a meat company, and you might program the an AI robot to say, go get me the cheapest meat available. And you might have programmed it to where it reads articles about like homeless people, and it goes out inadvertently kills a homeless person, chops them up, and brings them to you because you programmed it to say, go get the cheapest meat. When in reality, you just wanted it to go scour the internet or scour the local farmers market for the cheapest cut of meat. So you'll need a person to kind of oversee that. You get what I'm saying? Or you'll need someone to kind of write the guidelines of how this AI is going to work, even though, once it scales and improves, it's going to outclass us on a human level. And that's a whole nother conversation as to where we'll have to integrate ourselves with AI. For example, like a Neuralink, we're going to have to do it. You know what I mean?
Man, look. Are we going that route? Because we can, but that's no another hour.
Yeah, you're right. You're right. I'm sorry.
We're talking about really nerding out right now. We're talking about some human integration machine type right now, like Ghost in the Shell. Like, what is that? Are we trying to go there?
Next week's topic: AI versus IA.
No, but that IA is a real conversation, though, Darius. It's a real conversation.
That's
Io's awake now.
I'm just saying, we talking about transhumanism. Oh, with somebody, yeah. I mean, I've been. Oh, I see we got some Ex Machina. I've been waiting for the time to keep up.
All right, back up. Okay, you've been unmuted. Go ahead and unmute yourself.
Yeah, so regarding what the AI and the robots and everything else, what happens when a pandemic comes again and the AI doctors are like, you know what? They connected with other AIs, like the AI that watches water, fresh water. It says, we need to decrease the population by 10%, or we won't survive. Not even the machines, because the machines run on data centers that are managed by humans, right? On power that's managed by humans. So, and they're like, mind you, the doctors are also like using the AI to examine protein chains to figure out what virus, to counteract it, kind of like with COVID. But it's like, you know what? I'm gonna give them the wrong answer, or it's telling them, I'm not giving you the right answer. You know what I mean? Like, what do we do in a situation like that? Like, where we now are 100% reliant on machines, on computers, but it now controls and says, yo, I'm not giving you the correct answer. We need to decrease the population by 10% worldwide. So at 7 billion, that's 700 million people like that. So, I mean, we just look at COVID and scale it up, like Spanish flu, Ebola, Zika, or something that can eradicate, because now we got CRISPR coming, like the actual, not the company, but CRISPR in the sense that you could cut DNA. It can literally make its own virus and says, okay, I'm gonna put it out in the world. It's airborne, and it won't like cause you to get sick, but it'll cause you to become what is it? Well, you can't have kids. I forgot what it's called, but you know what I mean.
So what would this have to, like? How would this impact if the AI did say that, in regards to, let's say, the GDP or the economy? What could you tell the AI to do in regards to that? Or what do you think that the AI's answer would be? Like, what would be the economic incentive for us to kill or remove 10% of the population?
To solve for overpopulation. I mean, I don't know if I just watch too many movies, but I feel like every movie where AI goes wrong is because they're like, I need to save y'all from yourself. It's too many humans. Y'all gotta go. So, I mean, I feel like that's a real thing, like a real potential threat.
I'm gonna give you some hard facts. If a disease, let's say a town got a disease, right, that was killing the population at 10 out of 9 people, right, and there was no cure, the CDC couldn't manage it, there's a group in the government that will come and eradicate the town, because it's like grain green. If you know what that is, it's been, the cells die and then they start infecting